Hi guys. Today we will analyze Merck stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. Merck has been an average performer in the overall market. The short-term trend is negative, the long-term trend is neutral. Not much exciting going on here. Strong support level is around $72. The next support level is around $71. Resistance level is around $82.50. Strong resistance level is around $84.50. In the last month the stock has been trading between $75 and $82 range. It is currently trading near the lows of this range. The stock has an average volume of 13 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 6% per year, for last 5 years. We see that the average profit margin of the stock has been around 15% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 133% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Merck Company: bad, average, and good. First scenario. Merck will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 4%. Future profit margin would be low, 9%. Future free cash flow to net income rate would be low, 65%. In this case, the fair value of the stock today would be $66. The second scenario. Merck will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 6%. Future profit margin would be average, 12%. Future free cash flow to net income rate would be average, 75%. In this case, the fair value of the stock today would be $105. The third scenario. Merck will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 8%. Future profit margin would be high, 15%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $166. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 4.86. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Merck, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 12. Again, I will use 3 different scenarios for Merck Company: bad, average, and good. First scenario. Merck will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 14. In this case, the fair value of the stock today would be $35. Second scenario. Merck will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 6%. Future P/E would be average, 18. In this case, the fair value of the stock today would be $53. Third scenario. Merck will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 8%. Future PE would be high, 22. In this case, the fair value of the stock today would be $77. As you can see, today the stock is a little bit overvalued, $77, if we expect the company's medium-high performance in future. Based on estimates for the next 5 years, Merck will show a small growth in revenue. And it's currently overpriced. I may consider buying the stock when it drops below $60. Company's strengths. Merck is a leading worldwide pharmaceutical company. Its major drugs include treatments in oncology and diabetes. The company also has a leading vaccine business and an animal health division. The company is relatively successful at execution of new projects and generated good returns on capital expenditure by building new revenue streams. Successful track record of integrating complementary firms through mergers and acquisition. It has successfully integrated number of technology companies in the past few years to streamline its operations and to build a reliable supply chain. Successful track record of developing new products, product innovation, for example, new COVID oral pills. The company has return on assets of 8% and return on equity of 20%. This is amongst the best returns of the industry. Profit margin of 14% is amongst the best returns of the industry. Risks. Merck is subject to intense competition for treatment market share from other brand-name drugs. It also faces risks from generic and biosimilar makers that market copies of brands by challenging their patents in court and flood the market once patents expire. The company also has risks associated with drug failures in clinical trials, regulatory approval hurdles, and the potential for unfavorable pricing and patent regulations handed down by the government. Based on estimates for the next 5 years, Merck will show a small growth in revenue and in EPS. The revenue will grow by 8% on average per year. The EPS will grow by 8% yearly. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.